Welcome to Drill On Earnings. We have quarterly results out from Meta, the company that we're not going to call Facebook, even though I want to call it Facebook and I think of it as Facebook, but I'm going to say Meta. The stock ticker's Meta. This is the business story behind one stock on a move. Although it's not moving that much, let's look at why that's the case. This is, of course, a chance to look at how this business really works. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research. I've been covering this company since it was private and in great detail. But these Q3 earnings are showing some interesting trends, and I think some things that are misunderstood about this company, particularly when it comes to the big worry of Wall Street, which is capital expenditures by a happy spending Mark Zuckerberg. It's been a worry in the past, but I don't think it should be. Let's look at these numbers. So sales were up 19%. That's freaking amazing, because this is a big business. $40.6 billion, and you're growing revenues at a 19% clip. It's a little slower than it's been earlier this year, but my goodness, it's just fantastic growth in this business. How do you grow? You're barely adding people, but you're still adding people. Who's not on WhatsApp or Instagram or Facebook? I don't know. Or people with the weird Ray-Bans walking around with Meta Ray-Bans or Oculus, whatever. 3.29 billion people are now on daily active users, active using families on this service. That's up 0.6% from the previous quarter, 5% from the previous year, and they're charging those people more and more money every quarter. That's where the real growth is coming from. And the profitability is getting better. The operating margins of this company, which were amazing when they were 20% 2 years ago, are 43% right now. So it's a big, fast-growing, extraordinarily profitable business. And so are they spending money to get that growth and support these users? Yeah, but their R&D pace of decline, that had been sailing. I remember that was the old worry. Mark Zuckerberg spending a ton to build these stupid reality goggles no one's going to want to use. And Wall Street started to beat up the stock and criticize him for that spending. He pulled back on that spending, and the rate of decline was significant. But as a percentage of sales, R&D's kind of hung in there a little bit below 30%. And again, that the rate of decline of R&D, it's kind of leveled off. And that R&D spending easing overall. At one point, it was 33% of revenues only a couple of years ago. Like I said, now down to about 30, or below 30. How did the stock react? It didn't react much at all, down 3%. In the last year, of course, the stock's up nearly 90%. A fantastic move for this big company, 96% going into this print. And so the user growth is fantastic, right? We like that. But let's talk about capital expenditures. So in the memory of investors and the world is how much money they used to spend on CapEx, they were spending both on CapEx and spending on R&D. So this CapEx issue, spending so much money on AI when it wasn't clear what the generative AI uses would be for Facebook. Now the AI uses for Facebook were to use AI to recommend stuff that people would want to stay on the Facebook service for or on Instagram. That's a quiet use of AI. The generative AI use has been on the Meta AI, has been also very expensive for this company. But there's two ways to look at this. You can look at it as a percentage of revenues. You can look at it as a percentage of profits. Either way, those numbers aren't too bad from what they've been. As a percentage of revenues, 9%, kind of where it's been for the last few years. As a percentage of profits, yeah, it was up nearly 80% 2 years ago, 3 years ago, but now it's down to 26%. Again, hasn't changed that much, even though the number is 9.2 billion. 9.2 billion in 13 weeks sounds like a scary amount of spending, and it is. But it's not so bad given how this business is growing and as a percentage of the profits of Meta. Here's what Mark Zuckerberg had to say about the focus on this Meta AI and maybe what we're looking at as a new kind of product and a really big and a product a lot of people might be using coming from Meta, that being Meta AI.
This year, we really focused on rolling out Meta AI as kind of our kind of single assistant that people can ask any question to, but I think that there's a lot of opportunities that I think we'll see ramp more over the next year in terms of both consumer and business use cases for people interacting with a wide variety of different AI agents. Consumer ones with AI Studio around whether it's different creators or kind of different agents that people create for entertainment. Or on the business side, we do want to continue making progress on this vision of making it so that any small business or any business over time can, with a few clicks, stand up an AI agent that can help do customer service and sell things to all of their customers around the world. And I think that's a huge opportunity. So it's very broad. And I think part of what we're seeing is that there are a lot of opportunities. Some of the longer term ones around Meta AI or AI Studio, those aren't necessarily a next few years massive profit opportunity, but there are a lot of things in the core business around engagement and monetization, which I think will be over the next few years. So I think we're trying to make sure that we get the right people working on this and that we have the right amount of investment that's just going towards what we view as a very, very large opportunity.
So he's gingerly not saying a lot of investment, he's saying the right amount of investment. The right amount's a lot, but so are Meta's profits. So what's it all mean? What's your big drill down earnings takeaway? Okay. Meta Q3 earnings, your essential summary tells you that revenues were fantastic for the business, above 40 billion for the second time ever, and improving at a 19% clip on a year-over-year basis. Fantastic growth for this very big and very profitable business. But the one number that tells us a whole lot that we want to remember is not the 9.2 billion in capital expenditures this quarter, third most ever. No, it's the 9% of revenues being spent on CapEx. Not much worse than it's been for the last few years. All right, thanks for checking out Drill Down Earnings. I'm Cory Johnson.